Good morning, I'm Chris Beach and welcome to Charting the Markets on IG Live. And at the start of a very busy week, busy 2 weeks really, for markets. This week is jam-packed with data across the board. We start today, of course, with flash PMIs from around the globe. We've just had really the latest set of Eurozone and UK PMIs coming through. And that continues this afternoon with those US flash PMIs for the month of July as well. And then it really gets busier from there. Earnings season always seems to take a bit of a hiatus on a Monday, but it restarts tomorrow with more earnings from the US, a large slab of the S&P 500 reporting this week, including such luminaries, of course, as Alphabet and Microsoft. So that's likely to be market moving across the board. And of course, we've got decisions from the Federal Reserve, the ECB and the Bank of Japan. So it doesn't really let up at all this week. Nonetheless, after a bit of a slow start in markets, apart from the Nikkei, which was up about 1% overnight, Asia was fairly muted. And European markets as well struggled to really find much momentum as the day started in London. But they have managed to pick up speed as the day has gone on really into the second or third hour of trading. US futures also beginning to pick up a touch. So some optimism does remain in markets, even with all this data that's heading towards us over the next 5 sessions or so. It's likely to be a very busy 2 weeks, really. Non-farm payrolls, of course, come up on the horizon as well, and more earnings next week. So there's a lot for markets to digest, not just this week, but into next week as well. Starting with the indices, beginning with the FTSE 100, currently trading at about 76.68 after what has been a fantastic rebound for this index, it has to be said, from the lows of July, really. The index preempting that CPI reading for the UK last week, which showed a weakening of price growth for the first time in a number of months, really. Signs perhaps that inflation in the UK is beginning to abate slightly. But after a 400-point or so rally from the lows of July, the index was looking a little bit tired this morning, but showing signs of further strength as the session begins to move on. And we now find ourselves at this crucial 7,700 area of support and indeed resistance. It was support on the way down during May, and then we had an attempt to breach it during the middle of June, which then failed and turned into another leg lower. But perhaps the index finds itself in much more solid form as it rebounds towards 7,700, coming back from that arguably overstretched position to the downside, that lower low in July. We've now seen it recover, and we're back to this almost this 7,700 level. So this is the key one. A daily close above 7,700 would probably add to the bullish view that has been given further impetus with this rebound. It has to be noted that you have what's called a death cross with the 50-day moving average crossing below the 200-day moving average here. So that's a slightly negative development, it has to be said. But we've broken back above the 200-day and the 100-day moving averages and above trendline resistance from that April record high. Sorry, the April high, not the record high. Really, so the longer-term view then says we've now moving on to target downtrend resistance from that record high, which was in February, all the way back in February, up at 8,050 or so. So that takes us on to about 77.80 or so. So a very impressive performance for this index. No sign really of it slowing down or reversing just yet, although I think there'll be a few people thinking that maybe this move has gone too far. Certainly at the moment, the price action isn't really giving them an entry. You've not seen a reversal here. That would have to come with a move back below, say, the 200-day and back below 75.70. So do watch out for that. But overall, the buyers firmly in charge on this one. It's just now a question of watching the 7,700 level to see whether the index can continue to move on, even after what's been a very impressive rally for the month so far. Looking over to Europe, the DAX still very much broadly in consolidation mode. And this is one of those indexes that has struggled over the past 2 months, really, 3 months now, really, from its record high, actually, which it eked out in June. Essentially, it hasn't really gone anywhere, really, since then. And we find ourselves roughly where we were in the middle of May, up about 16,200. Nonetheless, it has to be said, after what has been a huge rebound from October, always good to get the longer term view. You have 5,000 points, around what, 30% gain for the index from that September-October low, 37% in fact. It's not surprising to see it consolidate, but not turn lower in any substantial basis. It looked like something might happen during the course of July, but we saw the buyers come back in again around 15,500, getting it back above this crucial 15,700 level, and still leaves us on course, I think, over the course of time to test 16,400 and potentially even higher from there. So record highs for the DAX could be a very short distance away. ECB meeting this week, of course. So the DAX, the CAC, euro dollar, all these European indices and Eurozone assets will be closely watched as we head towards that ECB meeting. But the DAX still broadly on the up, and you're seeing buyers push this one higher. So again, as with the FTSE, there's not much sign of any downward price action for the time being. So it looks like perhaps the upside case still has precedence for this one. And just as we saw the FTSE 100 move higher strongly over the past 2 or 3 weeks, the Dow also has finally managed to find the strength to move higher in company with a lot of other US indices. Remember, the Dow, the laggard of the year so far, really, and the Russell 2000, as we were talking about last week, mainly because of its reduced weighting in tech. With other sectors finally beginning to join in, you have then seen a recovery for the Dow, and that puts us at its highest level here since April of last year. A very impressive recovery, all things considered, for the Dow. The next big level to watch really becomes those February 2022 highs, around 33,940 or so. And then from there onwards into the record high zone, we have the November, December, January highs from the end of 2021, the beginning of 2022, onwards towards 37,000. Interesting that over the past month or so, a lot of people, notably Goldman Sachs, have actually come out to say that maybe new record highs for US indices might be the base case for the rest of this year, which certainly marks a huge change from the rampant bearishness you had at the beginning of this year. But markets, as ever, doing their best to surprise everybody. As with the FTSE and also with the Dow, really, with the DAX rather, no sign of any sustained selling pressure at this one. Sellers will need to ideally see it back initially below 34,940 and then really back below, I think, 34,500, which was the big level preventing further upside into June and July. So for the moment, looks like the buyers held sway, although it has to be said, looking slightly overstretched ahead of what is a very busy couple of weeks for markets. All those earnings and the Fed meeting and non-farm payrolls mean it could be a volatile period without much firm progress in either direction, particularly for US indices. Looking at FX markets, a slightly quieter start to the week, although those flash PMIs providing some movement, signs of weakness coming through, particularly in the Eurozone. That's weighing on euro dollars, we'll see here. After that rally to its new higher high last week, the currency pair has taken a bit of a knock. Now find ourselves testing this area around those highs from April and May. So it's classic technical analysis here. We're watching the levels that were important before potentially important again. Usually the mantra is once resistance is broken to the upside, it can become support, which is sort of what's happening this morning, although obviously there's a lot to come this week. Nonetheless, a new higher high in this uptrend certainly does mean that we're looking more to arguably buy on weakness rather than sell the rallies. And after that substantial rally from the beginning of July, when we were down at 108.30, we got all the way to sort of 112.50. Some weakness again ahead of the ECB meeting this week is not surprising. With the decline in Eurozone CPI, it maybe gives the ECB cover to be slightly less hawkish, and that might weigh on Eurodollar in the short term. But you've got the Fed barely 12 hours before that. So that's another factor to bear in mind. Whatever happens, whatever market you're looking at this week, really it's impossible to escape all the major events. They will affect almost everything in some way. So just be prepared for that, I think, really. Nonetheless, you've got really a short-term uptrend as well from the middle of May that has continued to support this price. So pullback maybe towards 110 over the course of time would sort of bring sentiment down quite a bit. I think it's probably a bit too bullish on Eurodollar in the short term. Might bring sentiment back down again and provide the potential for another leg higher in due course. Talking about sentiment, positioning in the pound against the dollar has reached highs we've not seen in a number of years, it has to be said. Unsurprisingly, of course, people crowding into this trade given the huge gains we've seen in the pound since March, and indeed, of course, since all the way back in September. A very impressive change of trend here. New higher highs, new higher lows, it's all there really for uptrend. And this pullback actually is the kind of thing you want to see if you are looking to go long, because you don't want a price that just goes up and up and up with no sign of a real entry. What I think is playing out here is perhaps something of a repeat of those pullbacks of May and indeed June, early July. The price retreated from a new high and then started to recover. But certainly it's not stopped going down yet. And to boil sort of price action technical analysis down to its basics, things have to stop going down and then start to recover before they start to go up. And it doesn't tend to happen within the course of a session or two. It takes probably a week, as you can see during the course of June. It pulled back and then finally started to recover and then moved certainly higher. I think the abiding sin of most traders is they probably jump in too early. Yes, it's pulled back. Yes, it's still an uptrend, but we can't really say that a higher low has been formed just yet. So caution is still here. It's probably the short-term sellers still hold sway. And again, as if to say it again, it's a bit of a broken record for me this morning, sorry. Fed on Wednesday and all these other major events will probably have some outsized effect on this pair as well as a number of others. And then, as if to sort of keep repeating this, dollar yen, decent bounce though from the July lows. If you cast your mind back to late June, we were talking about potential intervention in FX markets by the Japanese Ministry of Finance because they were worried that the rally in dollar yen, the weakness in the yen more than anything else, was causing problems for the economy. You've then had that sharp pullback, and a very impressive one at that. But the selling stopped around 138, and then we started to recover. We're back above the 50-day moving average. You are seeing, of course, it's a bit of a lagging indicator, but MACD potentially giving us a bullish crossover once again, following on from that stochastic crossover. So the buyers firmly in charge here again, potentially targeting 144.90, 145 as the initial target before a fresh move to the upside. Continuing this uptrend, essentially, you've had the higher high, you've now had the higher low. So the buyer's really rescuing this one and putting this one back on course, perhaps, to move higher. And if you get perhaps a slightly more hawkish Fed this week, that could give even more upside. But Bank of Japan on Friday, still all to play for. Although that big move higher on Friday from last week was, of course, the Bank of Japan saying there was no change really to their yield curve control policy. That tends to be yen bearish, dollar positive, and indeed positive for the Nikkei as well. So that's why you saw that leap higher on Friday. So something to watch for there as we head to that Bank of Japan meeting. Finally, turning to commodity markets, gold drooping back after quite a strong gain from the July lows. Oil prices showing no sign of slowing down, however. If we're looking at gold prices, we broke higher last week, really, with some strength, moving back to 1982 for the first time since late May, early June. This, again, is a key area. I always prefer areas when we talk about support resistance rather than exact lines, because you can just see how repeated attempts to move into 1980 and indeed higher ran out of steam in May and June. We're now back there again. History has repeated itself in the short term, although this time we find ourselves really with the price recovering in a more sustainable fashion. You've seen it form a low around 1900. And again, it's easy now with hindsight to say, well, you should have bought gold down at 1900. There were plenty of false dawns on the way, so that's why risk management is key when you're trading, of course. It's now started firmly to move to the upside. Bit of a recovery this morning, holding around the 50-day, the 100-day moving average, and holding above 1960. So if it can do that, and you can get perhaps a positive close today that then carries us on above 1985, that would arguably reverse a slightly negative view of the past couple of days and put us on upward footing to move back to that all-important, psychologically important 2000 level and potentially higher from there. And finally, oil prices. No stopping them at the moment, really. It's such a change of pace here for oil after what's been a very mixed performance this year. Arguably a downtrend, but one that hasn't really proceeded elegantly. Every time you think it's really going to break to the downside, it then recovers. And that's what we finally had here. It looked like we were going to falter at the 200-day moving average and continue to fall. But then last week, the buyers came in to defend it. And we've broken above the 200-day moving average for the first time here since, brace yourself, August of last year. So maybe it's a change of trend. Maybe it's just a bit of a brief move to the upside before it then starts to slump again. But the pushing out of recession expectations has been a good thing for oil prices. Not so good for motorists, of course, but nonetheless. A daily close above the 200-day is a bit of a game changer here, perhaps. Always, perhaps. We can't say for certain, but an interesting one to watch. Then takes us on really to this 82 level, which we've not seen since April and was a big area, once again, of resistance all the way through from November and December onwards. So if it can get back above there, that would be a very interesting development. For the sellers, you need to see it really back below 74. I've talked about 74 before as a key one to watch because it was a big area of resistance during May and June. Back below there, and that would negate maybe the bullish view that we've seen gather pace over the past 3 weeks. More flash PMIs this afternoon from the US, and that really rounds off the day. Not much in the way of big name earnings this afternoon. Earnings season always seems to take a bit of a day off on a Monday, but it's back in action from tomorrow with more key earnings. And of course, you've got that Fed decision on Wednesday, the ECB on Thursday, Bank of Japan Friday. So it's a very busy week for markets all told. We're expecting a slightly more positive open for US futures now. The Dow looking stronger as we get closer towards that US Open. But that's it for me. Thank you for joining us, and we'll be back as normal tomorrow at 10:30.